Hello, friends. Welcome to the Weekend Investing Daily Bite of 25th November and a expected outcome of the strong election results over the weekend. It was expected that Nifty would bounce, and that's exactly what has happened. There was a rally on Friday as well, on more than 500 points, and it did seem like market got a whiff of the outcome of the elections and at least speculated on a positive outcome, and it came out right. So those who were shorting the markets on Friday first half are now finding themselves in a bit of a jam because they've now had two strong sessions of market upswing, and that has certainly given a lot of pain to the sellers. So the question is now, is the worst already over for the markets in the short term? That is the sort of thesis that one can allude to, or one can always say that this is a flash in the pan and we will revert back to downward side. We'll see a lot of charts and uh, narratives to discuss this further in this video today. Please read the disclaimer, do subscribe to the channel and click on the bell notification. So now let's come back to the Nifty chart, and you will see that And what we have been saying about the support point of the previous election high of 23,300 odd has actually come true. Uh, the fall from this end of September high was steep and without any major bounces. You had like a 2 day bounce here and a 3-4 day bounce here, but not really. I mean, you need significant relief, and then potentially the market can go down further. So right now, this is a relief rally, but it's a relief rally built on reasonably strong footing because you've come off a very solid support base. There was a high volume day on Friday. It closed above 2 day high, so that high probability condition that I've been talking about also got met, and you had a gap up which did not close at least for the day. Was it just a flash in the pan? You would have seen this gap close down today itself, and maybe the close price could have been near the Friday close, but that has not happened. Um, of course, this 24,500 odd level is going to play a lot of resistance going forward in case we go there. But as of now, you would have to assume that this is a new leg up that is forming. At some point, it may become strong enough that it may go and seek a new high, or it may collapse back on itself. And then again, we will look at this support, whether this comes into play or not. Why this 24,500 odd is important is because if you see on a slightly longer basis, this head and shoulders pattern that is there, rough head and shoulders pattern, I would call it, the right shoulder kind of gets uh, cancelled out above this 24,500 odd level. So this head and shoulders that we had completed its target at 23,300, as was pointed. The bigger one has maybe this was the irregular right shoulder, or maybe we will form an irregular right shoulder right here. And once if that happens, then of course we are down to 21 something, that will become the target. So right now it looks like the short term pain is over, and market will have to negotiate this 23,900 to 24,500 zone. And once if it does accomplish 24,500 and above, I think that will be reasonable proof that we are not going lower for now. 1.32% on Nifty today, and you also had a couple of percent on Friday. So in 2 days time, you've gone up 3.3%. Nifty next 50 also up 2%, a good gap up, and not give back any of the gains for the day from the open, which is a good sign. But of course, here also, unless this 72K mark roughly is taken out, it will remain a iffy position going forward. On the Nifty mid caps, a good gap up at 1.53%, still within the range of this major fall of 5 sessions. So not out of the woods, but it's a good comeback from again from this top of the previous election day high. and one can hope that we will build up on this. Small caps also were looking good, closed at 2-day high, did not give up the gap, 2.11% up above a support channel. I think small caps are looking quite decent versus the rest of the indices. Bank Nifty coming very smartly from nearly 50,000 to 50,000, 52,200 in just 3 sessions from Thursday bottom, and a strong comeback. And now, if you see, I mean, it is hardly 4% from its all-time highs. So 2.1% on Bank Nifty is looking decent. I would say this is the only chart which is above the 40-day moving average. So no certainty of and there never is any certainty, but from a probability perspective, we are certainly looking upwards. Advance decline is very much in favor of advances today, 408 advances versus 91 decline. So uh, that's a good number to have. On 22nd November, FII cash outflow was one of the lowest in the last many weeks. Um, FII index buying in options and futures were also a very high number on that day. So it does seem like that some short covering did happen from the FII front, but that is not reflected in positive cash numbers yet. Heat maps were largely green today. You can see Reliance up 1.7%, State Bank up 3.4%, TCS up 1.6, HDFC Bank up 2.2%, ICICI Bank 1.79%, and many stocks of public sector nature were also up. JSW Steel, Infosys, Tech Mahindra, Bajaj Auto were some of the losers. Significant gains in most parts of the market. Adani, many stocks were losing ground. Um, Varun Beverages lost 2.48%, HAL, IOC, um, you had Siemens go up 7%, ABB 5%. So a good pickup in many sectors. DLF up 2.4%, REC, PFC, IRFC, PNB, all the public sector stocks doing, NHPC doing well. So overall, a quite a good day, I would say, from that perspective. Sectoral trends, PSU banks made a huge comeback today at 4.2%. So they have now gone positive from the week. Just remember last week, all this was red and the 1 month was also red. Now, several sectors have come into the green on a monthly basis and almost all sectors on the weekly basis. Metals are the only one which are down on a weekly basis. So 3.7% for the week on PSU banks, 4.3% on public sector enterprise. Real estate has come back very strongly at 8% for the week and 5.6% for the month. For the day, metals, IT, auto were still muted, I would say, but because the outcome of the election was giving more confidence to the stability and strength of the government going forward, and hence public sector uh, stocks were in the forefront. However, how much can this hold on in the next few days is yet to be seen, but the confidence at least was back for the session today. And you can see some of the public sector banks, how they ran up 8.4% on Central Bank, Indian Bank up 6%, UCO Bank 5.8%, Bank of Baroda, PNB, IOB, all of them doing quite well today. A lot of it also may be due to heavy short covering in several of the futures counters. Overall, PSU banking up 4.18%. Stock spotlight was on Poly Medicure, up 16% today. So this stock had been falling from nearly 3,300 rupees to 2,500, and I believe we hold it in one or two of our portfolios. A single day, it has up 16.2%, and its long-term chart also has been very strongly going up in the last, I would say, 4 or 5 years. We've gone from nearly 200 rupees to 3,000 rupees. So very strong counter. Look for dips on this and uh, potential setups for discretionary buying. Let's now come to the topic of the day. Is the worst already over for the markets? The answer is probably yes, in my opinion. Um, but uh, I could always be wrong. Um, my sense is that nothing really has changed in terms of domestic flows, despite the market coming off. The FII outflows looks like it is reducing, if not reversing. Um, Confidence on India market is probably going to stay stable in my view, with CLSA recently, saying that other markets like China are more attractive and then reverting back. MSCI inflows coming into large caps, necessary correction having happened in many of the stocks. So it does seem like that significant sort of fluff has been taken care of. While the from a valuation perspective, the experts still say that India is extremely overvalued, maybe 20% or so from the normal long-term average. But uh, I mean, so is the rest of the world. So if we are looking at relative situations, I mean, even the US is 20-30% above its long-term average. We are also above 20% above long-term average. And I think those long-term averages have lesser and lesser meaning as we print more and more money. But that's a subject for another day. So this is my morning tweet where I thought that, the mood has suddenly changed, at least for now. Uh, the talks of 21,000 and 20,000 have suddenly gone away, and how you know uh, those who would be sitting in high cash would start to then now feel a FOMO. If we sustain these levels for a few sessions also, you will find that a lot of folks who are sitting on cash are likely to feel left out, and then that money, once it starts to roll back in, again starts a chain reaction towards the higher side. So that's how the sentiment sort of moves like a pendulum from one side to the other. So there are some strong signs of optimism on a technical basis. Yes, strong support at 23,300 and a bounce. You had a huge election day high support, and once again the elections are proving to be significant reasons why a market moves up or down, and the confidence for the future. The market looks like it has corrected and is taking a new leg up. Above, as I mentioned earlier, 24,500, you may find that there is a head and shoulders pattern failure. If that happens, more and more short covering is likely to happen. This particular support point has also been broken out of, so that is another technical flag, positive flag. And then you also have the 200 DMA, which was breached for a few sessions, but a strong comeback from there. That is always a positive sign also from that point of view. The RSI, or if you may see several indicators which were oversold for last few weeks, they have also perfectly bounced from oversold levels. So that is another sort of confidence giving measure to at least to chartists. And there are sectors that had been in consolidation for some time, that are doing well now. IT is at a new all-time high, which is fantastic. Real estate index that had been correcting since July is moving up in the band. We don't know whether it breaks out or not, but it's putting on a strong show. Public sector enterprise stocks that have been sort of flattish for last 6, 8, 9 months have not yet broken down, at least, taking strong support there. PSU banks also that had flattened out since beginning of the year are potentially looking at more higher side from here. And dominant results in Maharashtra, a new parliament session with a lot of new bills. And now, with the coming towards the end of the year, the hope that the next budget, which is hardly what, maybe 60, 65 calendar days away, is going to, well, hopefully some optimism and stability in the markets. I am not very uh, I would say, looking towards any major runaway kind of a market, but I'm reasonably sure that the bottoms that we've made will not be easy to break. I mean, you really need some big. I mean, just look at the Adani news also. I mean, it was a big shocker for the market, but the market has sailed through it. I mean, set aside Adani stocks, whatever they may be doing, but the market overall has not taken that negative sentiment into its stride. I think these are pointers that inherently the market is reasonably sound and looking to go up. MSCI rejig also today. So $2.5 billion of inflow is coming. While this is not recorded in the in the numbers that we're seeing, but these are huge bulk and block deals that are happening. Uh, you are seeing HDFC Bank get in a lot of new inflows. Of course, Adani stocks are seeing outflows. Oberoi Realty, Alchem, Kalyan Jewelers, all these are inflows. You also have uh, weightages of many stocks up. So, almost $1.8 billion coming in HDFC Bank itself. JSW Energy, Tata Power, all these stocks are looking for new inflows, and you're continuously seeing Reliance losing some ground along with TCS, Bharti Infosys, and ICICI. So the readjustment is happening because the prices are moving lower, and hence the weights are also moving lower for many of these stocks. Anyhow, so overall, if markets are absorbing new capital is coming in, that is always sort of positive also for the India story. So it's just summing it up, market seems poised for a recovery, but no point in predicting it. Follow the trend, follow the index or particular sectors that you're looking for. If you find that the indicators are pointing towards some sort of a up leg, then try to take positions or try to look for setups there. Uh, in terms of momentum investing, the way we are doing it, we of course don't take any cue from day-to-day markets, and we allow the system to guide us when to get out of stocks, when to get into stocks. And um, for many of our strategies, we really don't find too much of either any sort of froth in the stocks or completely oversold kind of stocks. And as you go along, you will find that this daily or weekly noise of the market is 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 put on the back burner, and you will stop to bother about how the market is doing on a day-to-day basis once you follow a strategy and once you sort of go on that path where each stock is not so important, but the entire portfolio is geared towards wealth creation or not, that becomes important for you. So as long as the longer runway of the India growth story is something that you believe in, and you have a strategy where you are able to keep with the strong stocks and lose the loser stocks, I think over a period of time you automatically will make significant wealth. That is not a question really. So which sectors you might lead the recovery going forward is the question I'm posing to you. Do mention in the comment section. It will be nice to read through that. What is your view on the markets? I strongly believe that the recent lows that we have seen, I think, will not be breached very easily, and we should look with optimism towards the market going forward. Thank you so much for watching. Do like and share these videos with your friends and family, and do keep sending us your feedback about these daily bites, and we'll be happy to go along with that. Thanks. Bye.